All right, hello everyone, and welcome to lesson 4 in Unit 3, Area Study 2, where we're looking at the domestic macroeconomic goals. Today we're going to be looking at the consequences of not achieving the goal of strong and sustainable economic growth. So last time when we looked at this, it was all about the goal and how it was measured. So we looked at the goal being the highest growth rate possible without causing unnecessary inflationary, external or environmental pressures, a rate at which GDP growth, real GDP growth, grows at a rate of 3 to 3.5% per annum. So that's really important, and we looked at how we take inflation away from that, which is we deduct CPI from the overall growth rate. Today we're going to be looking at kind of the issues that occur if we are not achieving that goal range. So what happens if we're above it and what happens if we are below it. So getting straight into it, our key knowledge is all about the consequences of not achieving that goal. So what we're going to look at is its effect on living standards, which includes environmental degradation and external pressures, high inflation if growth is too high, and high unemployment if growth is too low. It's fairly common sense. This video is not going to take very long. So a lot of this you're going to be able to understand based on just logic, but we'll go through it one by one anyway. So our learning intention is to understand the impact of changing economic activity on domestic macroeconomic goals, in this case growth. And our success criteria is you can explain multiple consequences of not achieving the goal of strong and sustainable economic growth. So first up, if economic growth rates are below the target rate, so if economic growth is too low, so if it is below that 3 to 3.5% per annum, so if it's below 3 to 3.5 GDP growth, that is going to mean that unemployment is likely to be higher. Because if growth is too low, businesses see basically stagnant profits as not a good thing, and they'll start laying off workers to try and protect those profit margins. Living standards are also likely to be lower because they're going to have lower average incomes and less choice because there is less production overall. Then, if growth rates are above the target rate, so if we are beyond that 3 to 3.5%, that is going to create some other issues. So part of it is going to be that if there's too much production, there could be demand inflation occurring, because if there's widespread shortages occurring, it's going to put upward pressure on prices. The environment's also likely to be damaged rapidly as resources are depleted and higher rates of pollution are likely to occur from excessive production. External pressures can also occur if our inflation rates rise faster than our trading partners. If our inflation rates increase too quickly because of our excessive growth, this means our exports become more expensive and therefore less attractive to our trading partners. And that means that we're going to be able to export less overall, and that is going to be negative in the future for employment, incomes, etc. And that's literally it for the consequences of not achieving the goal of strong and sustainable economic growth. So if it's too low, it means there's likely to be high rates of unemployment and lower material and non-material living standards as people are earning less and are more stressed about the future, etc. If growth is too high, it's likely to cause inflation, which can create external issues for our country as our exports become more expensive, and also that it's likely to degrade the environment at a rate that is too quickly. If you have any questions about any of this, feel free to leave a comment below or email me, sean@therunningeconomy.com. But other than that, I hope you're having a wonderful day, and I will see you next time for the goal of full employment. Goodbye.